Trading or investing? Both sound like ways to make money in the market, but they're actually very different paths, with different strategies, risks, and rewards. In today's video, we'll break down the key differences, show you the pros and cons of each, and help you decide which approach might suit you best. By the end, you'll know whether you're a trader, an investor, or maybe a bit of both. What is trading? Let's start with trading. At its core, trading is all about short-term movements. Traders buy and sell assets like stocks, currencies, or commodities, not because they believe in the long-term story, but because they see opportunities to profit from short-term price fluctuations. Think of trading like sprinting. It's fast, intense, and requires constant attention. Styles of trading: day trading. Buy and sell within the same day. Swing trading, holding for days or weeks to capture price swings. Scalping, ultra short-term, seconds or minutes. Position trading, longer trades but still shorter than investing. Traders rely heavily on technical analysis, charts, patterns, and indicators. They're watching support and resistance levels, candlestick formations, moving averages, all tools to help them predict the next price move. What is investing? Now let's talk about investing. Investing is a long-term game. Instead of trying to predict daily or weekly price changes, investors buy assets, like stocks, bonds, real estate, or ETFs, with the belief they'll grow in value over years, even decades. If trading is sprinting, investing is a marathon. Common investment strategies: value investing, buying undervalued companies; growth investing, betting on fast-growing businesses; index fund investing, passive approach, tracking markets like the S&P 500; dividend investing, focusing on steady income streams. Investors lean more on fundamental analysis, studying company earnings, management quality, industry trends, and long-term economic outlooks. The goal isn't quick profits, it's wealth building and financial security. The core differences. Okay, so what are the key differences between trading and investing? 1. Time horizon. Trading, seconds to months. Investing, years to decades. 2. Mindset. Traders, active, speculative, high adrenaline. Investors, patient, steady, long-term focused. 3. Risk profile. Trading, higher risk, big wins but also big losses. Investing, generally lower risk, especially with diversification. 4. Tools and approach. Trading, technical charts, price action, momentum indicators. Investing, balance sheets, earnings reports, macroeconomics. 5. Income style. Trading, short-term profits but inconsistent. Investing, wealth compounding, dividends and capital appreciation. Pros and cons. Both approaches have advantages and disadvantages. Let's break them down. Trading pros: quick profits possible, thrilling and engaging. Can profit in both rising and falling markets. Trading cons: very risky. Most retail traders lose money. Requires time, skill, and emotional control. High transaction costs if over-trading. Investing pros: proven wealth-building strategy over centuries. Less time-intensive once set up. Benefits from compounding and dividends. Investing cons: requires patience, no overnight riches. Market downturns can test discipline. Lower excitement compared to trading. Which is right for you? So, which one should you choose? It depends on your personality, financial goals, and lifestyle. If you're disciplined, love research, and can handle long-term patience, investing might be your path. If you thrive on quick decision-making, can manage stress, and have time to monitor markets daily, trading could appeal to you. But remember, most people aren't full-time traders. For the majority, investing is the safer, more reliable path to financial freedom. Blending both. Here's something most people don't realize. You don't have to choose one exclusively. Many successful people invest 90% of their wealth long-term, while trading with a small portion for extra returns or learning. Think of it as your financial diet. Investing is your main meal, trading is your dessert. So, trading versus investing. One is fast, risky, and exciting. The other is steady, proven, and reliable. The key is to know yourself, your risk tolerance, and your goals. If you found value in this video, hit that like button, share it with a friend who's into finance, and subscribe for more deep dives into money, investing, and financial freedom. And remember, the best time to start was yesterday. The next best time is today.